Hi, I'm Michael Gable, Managing Director at Fairmont Equities. We had the US CPI numbers out last night, so I want to show you a chart of these CPI numbers because they will have very important implications for interest rates. Of course, any of the advice here is general only. So this is a chart of US CPI going back to 1996. So the blue line is the headline rate, the red line is core inflation. As we can see, they're both clearly trending lower. Obviously, the core inflation lags the headline rate, but what's important here is US CPI has headed down from about 9% year on year, and now it's running at 4%. And overnight, everyone was expecting the number to be 4.1%. So the reason why I'm highlighting this chart is because there is a lot of bearishness out there and there is still a lot of cash on the sidelines. The problem is everyone seems to be looking in the rearview mirror. So everyone's worried about what last quarter sales figures were like or what the interest rates are today. However, we need to look at the trends and we need to look forward. And this is what investing is all about. So as we could see with the US CPI, it is trending lower. It doesn't matter that it's above target. The key point is that it is trending lower. Where will it be over the next few months or so? Obviously, higher inflation has led to higher interest rates, and then the higher interest rates is what is causing a lot of the problems that we're seeing in the economy. Therefore, if inflation can be a lower number, interest rates can be a lower number, and then obviously we'll be in a better place and share markets will be trading higher. What you don't want to do is fall into the trap of going along with the negative narrative that you see in the media. What I'm describing sounds simple enough, and it is. There's not really much else to it. You don't want to be fooled by a more complicated narrative because it makes that person sound more intelligent. The key point is US CPI is trending lower. Aussie CPI is also trending lower, although it does it with a lag compared to the US. Lower CPI, lower inflation leads to lower rates. When it comes to investing, we need to think about what's happening in the future, not what's happening today or has already happened. If you're looking for more ideas, go to fairmontequities.com, sign up to the free trial. You'll get our market outlook, our trading guide on how we buy and sell shares, and also 8 weeks of our research delivered to your inbox. And if you qualify for my personal help, then please call us and we can have a chat about that.